Good evening, friends. Nalinakshi Swami here. Today I missed the beautiful volatility and also beautiful trade on Nifty because I had other commitments, so I was not able to trade. But I'm analyzing after the market hours by seeing the chart. Here, the first candle, I'm in 3-minute time frame, first candle telling me lot of story. This candle is telling me lot of story. What you are seeing in this candle is the volume was high on the previous day, closing candle. And this volume was less. This seller's volume was less. And also, you can see a long wick in this candle. Though it is a selling candle, all the people panically sold in the opening bell itself when the market opened around 16,520. This was the opening of the 524. The panically people sold this, actually thinking that market is going to go down. And then they pushed the market, pushed the price through beneath this level, 16,486. And immediately you can see a long wick in this candle. So this is due to, actually, if you know the open interest built up and change in open interest, there were lot of put writers around 16,500. So people thought that many people, the price will not go beyond that. There was put writing seen in this level. So the big players pushed through this level to hunt these stop losses. Huge writing was seen in this. So they were able to capture the liquidity by pushing the price. So next candle also, this is the first candle. And next candle, you can see, though it is a big candle, spread wise, range wise, it's a big candle. If you measure the spread, it's a big candle when compared to. So there was the volume was decreased. Sell volume has decreased. You can see the divergence. So sellers were not there. Actually, they. Next candle, if you see, the buy candle came over here, trapping this red candle, going below this to the level of 16,502 and buying emerged there. You can see buying. And also this candle wick crossed the opening of this first candle. The opening of the first candle was 16,524 and this high was 16,525.75. So it's indicating some sort of buying is emerging in the stock, and also you can see a volume greater than this volume. So this confirmed something. So people, big institution, they grab their liquidity and then some sort of buying is emerging in the market. So if you draw a range between 16,481 to 16,521, it became the opening range. First 5 minutes, opening range. When price started moving above the range, the price has come out of the range. Why the price is coming out of the range? Because of the buying pressure, and also you can see a big candle, big bullish candle coming out of the candle. When you see the breakout of this candle, breakout of the range, and also big bullish candle, you need to mark the high and low of the candle. High and low of the candle, this candle is showing bullishness. The people actually, by seeing the red candles, they will get panicked when they take position about by the breakout candle. But after the breakout, it will retrace and prove itself, making a higher low. This is nothing but high. If you see the market structure, it is forming a high, and this low confirms this high. This low confirm this high, then you can, when you have to wait for the retracement of the price, but not going below this. This is a bullish thing. Then later on, you can see the market has continued continuously back to back. You are not seeing any, not even a single candle, bearish candle over there. In between, you are seeing some sort of trap. This is a trap candle. Trapping the people just to create one more liquidity. When you see this type of traps, you should understand that there is a liquidity crunch. So why it is liquidity crunch? Because it was near the previous day high. Price was near the previous day high, and also you can see this was the lower high when price made yesterday. When it fell back and pushed up, it was the lower high. This area, you can see a trap actually. Sellers, inducing the sellers and trapping them. And then price, and also you can see this candle also represents loss of momentum in the price. So you need to, this indicates some sort of people are feeling it is expensive and people are not willing to come into the market. So you can gradually, you can see in these candles, back to back candles, you can see selling pressure in these candles. Selling pressure, and also you can see a trapping candle over here. Trapping candle making a lower high and lower low. In this candle, there is a change in the behavior. When you see the change in the behavior, and the next candle, there is a huge selling pressure. So if you combine these two candles, this is a huge dozy. This candle, both the candles will form a dozy-like thing. So it is an indecision is starting. That means both buyers and sellers are aggressive in these two candles. Buyers and sellers are aggressive in these two candles, and you can see a next candle. This is a red candle showing some sort of weakness. What happened? In the next, you can see after that market showing started with weakness. It could not go past this level. It made a high of 16,583 and it started consolidating, trapping these sellers and immediately going up. This is nothing but they have trapped, and this is the range. This was the range, very important range for the market. The range has been created. Both buyers and sellers have been trapped, and then price started moving up. And later, you can see the weakness, how the trapping has done. Later around 2 o'clock, around 12:54 or something, selling pressure came into the market. Again, within two, these are the big players. These are the big, huge candles selling over here. And you can see lot of wicks in this follow through candles. So probably many people might have got trapped in this one buy, one sell, one buy, one sell. You can see all the wicks in those candles. Finally, it hit the level of 16,509, again pushing, trapping the. So because of the liquidity crunch, it came down and again it trapped the level of put sellers, because when the market started moving higher up, the people, when it broke the opening range, people will start selling the put option below this level. So probably after trapping these put writers, the market gained the momentum and these put writers again become active selling those people. So again the market came down to this level to create the panic, and then it grabbed the liquidity and finally it has closed at the high 16,618. If I shift the time frame to the daily level, let me reset it. This is exactly, it is nearing the resistance level. Resistance level where Nifty has fallen, reacted very vigorously and has fallen down. This is the candle, big bearish candle, which was responsible for the fall. This was the fall actually. Now it has come to this level 615. Whether it will succeed to go up or just push a little bit like this, or it may start going sideways in this region for 1 or 2 days, and then it may go up, cross this level. If it crosses this level, the bullishness reversal will come into the market, or otherwise it will be a failure. It will be a failure and it is a range actually. It is a range trade. This is entirely a range. Or it may be a Wyckoff accumulation going on there. If it is an Wyckoff accumulation, then price after going this, it has still unfinished job. It may come down like this and then it may start going. Or otherwise, if it breaks above this level, then bullishness will come into the market. Then this counter can be conquered, and Nifty can go past the level of 17,435. Only this level is very crucial. If it tries to go above this level, consistently close above this level, then the bullishness will enter into the market and you can see some sort of reversal in Nifty. Or otherwise, failure will bring back the Nifty to the level, back to this level. So thank you very much, friends. Nalinakshi Swami here, signing off.